Hello ladies and gentlemen and welcome to my channel. My name is Wietse Kuilboer and in today's video, episode number 12 of my series A Road to 100,000. And in this series I share with you my investment portfolio where I invest in growth stocks, dividend stocks and in ETFs. And if you also want to invest in one of those platforms just like me, please make sure to check the link in the description down below. And if you make an account, we will both get a nice welcome bonus, so that would be really nice. So for this episode, I wanted to show you guys my progress so far. I started this series back in February and I wanted to show you how much I have invested, what my profit is, what stocks and ETFs I own. And also this month I bought some shares in Shell and Aegon, so I quickly wanted to go over why I did that, of what price, how many shares I bought. So if that sounds interesting to you, please stick around and watch the video, but you can also use the timestamps to jump to the part that is the most interesting to you. So here you can see my investment portfolio at the moment. Here I have the stocks, the stock name or the ETF name, the amount of shares, the average buying price, how much I invested, the dividend yield, the current market price, the current value, profit or loss, and the percentage of my portfolio. And I also put here if it's a dividend stock or a growth stock, so I kind of know how to balance it out. As you can see right now, 53% is growth stock, 46% is dividend stock. And also here how I divide it between stocks and ETFs, 88% and 12%. My target is 20% ETF. So this overview really helps me also to see, okay, these were my targets before I started investing. This is what it actually is right now. So then I know where to invest in or where to add on to. So that's what I'm gonna do for next month. I'm gonna invest in ETFs. I think I will put everything in there. And here I just made kind of an overview of the different sectors that I am investing in right now. So the biggest one is Lemonade. It's 14.5% of my portfolio. And my target is to have positions not higher as 10% of the whole portfolio. So it was mainly because of the increase of Lemonade, because not that long ago it was trading for 61, and if you change it to 61 you see it's only 9% of my portfolio. But because it went up quite a lot, it's now almost 15% of my portfolio. And Lemonade is a growth stock, highly volatile. The price goes up and down like crazy. First time I bought it, it was 115, the lowest was 61. Now it's back above 100, so quite a ride. My idea with this is to really invest for the long term, but if the price keeps increasing, I might sell off a small part, but we'll see how that plans out. ABN AMRO took a big hit. Interesting to see, because I would like to buy some more of this, maybe if it keeps going down. Then Aegon, I added a lot to this stock, but I will go over that later. So Air France is kind of stable. Shell is now one of my biggest positions. I now have 80 shares of Shell for an average buying price of €15.26. Another stock that's really interesting, I made a video about this one as well. If you haven't seen it, you can check it in the link in the description down below, or you can click on the icon. It is going down quite a bit, so I'm considering also to add on my AT&T position, but like I said, I first want to focus on ETFs before I keep adding on to my stocks. And as of growth stocks, I keep seeing more and more signals that there might be a market crash or a market correction coming soon. Of course, no one can predict this, when exactly it's going to happen, but that it will happen is kind of inevitable at this point. So I'm kind of will be holding back a little bit if it comes to investing more in growth stocks, and I will focus more on ETFs and dividend stocks, at least in the short term, to kind of protect my investments and also to generate some cash flow in the meantime. Total amount invested is a little bit above 13,000, and the current value of my portfolio is around 14,500. So that's a plus of almost 1,500, but like I always say, short-term losses, short-term gains don't mean so much to me, because it's really about the long term. It's always nice to be in the plus, don't get me wrong, but it's the same as when when I was down. It doesn't really matter right now because this is only on paper. I'm not actually gonna sell my stocks right now. I also sold 3 shares. It was the free shares that I got from BUX Zero. So if you use my link to make an account, thank you so much. Really appreciate it. And that comes down to 32 euros and 60 cents. So that's nice. That's also included in this number. And what else is there to say? I want to close my GoPro position soon. And I also was thinking of maybe selling my Beyond Meat position on BUX X. Kind of planning on cutting back on that one a little bit as well. So for this one, I'm gonna go to the BUX Zero app. And I wanted to go over some of the dividends that were paid to me. Today I got a dividend payment from Shell, and they paid a gross dividend of 14 cents per share. But that's gross. Then you have the withhold tax, which is 15%. But I can get those taxes back with the yearly tax returns. And I will also make a video that goes more in depth because it needs more attention if you want to explain it right. And on BUX X, I also got some payments. In total, this position gave me 3.58 euros in dividend. We got a dividend payment from Unilever, 4.26 euros. 2 months ago, I got also a dividend payment from Ahold, 6.80 euros. Deutsche Telekom was a while ago, 14.40 euros in dividend investments that I did this month. They were all on BUX Zero. 14 days ago, I bought 110 shares of Aegon. Then I bought on the same day 51 shares of Shell. 4 days ago, I bought 22 more shares of Aegon because the price dropped quite a bit. Cash available is 6.56 euros, not that much. All-time change is 375. So why did I buy more shares of Shell this month? In my last update in the road to 100,000, I went over the reasons to invest in Shell a little bit deeper. So if you haven't seen that already, please check it out. Link in the description, or again, you can click on the icon. For me, the biggest reason is they have a great history of generating lots and lots of free cash flow and distributing this to their shareholders. And also their dividend policy really speaks to me. Their first priority is to increase their dividend by 4% per year. Their second priority is to reduce the net debt. And their third priority with free cash flow is to even increase the dividend payments more and buy back shares. So again, creating value for you as an investor. I also think that the Shell stock is really undervalued right now, because if we look at the free cash flow they generated in last quarter was 4.4 billion. And if you annualize this, this comes down to almost 18 billion in free cash flow. And if we take a multiple of 20 price to earnings, this would give you a market value of around 360 billion. And as of right now, Shell is trading for a value of around 130 billion. So there's a big gap, I think. And if we look here at the 5-year chart of Shell, you can see it was always around the mid 20s, almost 30 euros per share. It dropped to 10, and now it gained back some of their losses, but still nowhere near the price it was before. And that brings me to my next point, which is that I expect the oil demand to pick up, and it's already picking up a little bit. The oil prices are rising, but I think with the vaccines and the tempo that everybody is being vaccinated right now, the end of the pandemic is really in sight, and people will go on vacations again, and oil demand will definitely pick up then. And so if we look here at the short-term energy outlook, if we look at liquid fuels, this is what the forecast is in the short term. So here you can see big decrease in world consumption. Production followed as well. Next year we are at the same level or already on top of that level. So, and then why did I buy more shares of Aegon right now? Well, the same applies for Aegon as it does for Shell. I also recently made a video about why I am investing in Aegon, and because the price went down quite a bit, I invested even more in this stock. But yeah, same goes for Aegon as for Shell. Great history, exists for a long time, and is known to share their profits with shareholders. Right now the company is in the middle of a transformation. They are reorganizing the company, trying to reduce costs. They're doing that quite well. They are achieved already half their target in cost savings. and also they are focusing really on their strengths. So where they have a competitive advantage, that's where they are doubling down right now, and they are cutting back on their weaknesses. They also are reducing their debt so they can have a higher free cash flow in the future and get to the target of paying 25 cents per share by the end of 2023. And if they would pay 25 cents per share, and you look at the price it's trading for today, that would come down to a dividend yield of more than 7%. So if you're looking for a nice dividend paying company, Aegon could be a really good choice. Of course, this is a target and it's in the future, so it's uncertain. But I think with the steps they are taking right now, with reducing debt, really focusing on high generating cash flow parts of the company and cutting back on the parts that don't create a lot of value, I think they can reach this target by the end of 2023. So yeah, that was my update for today. So I bought more Shell and Aegon shares. Really curious to know in what stocks you are buying right now. So let me know in the comments down below. And if you made it this far, please don't forget to smash that like button. It would really help me out. I really appreciate your time. Thanks for watching. I hope I'll see you in the next one. Have a great day.